You know, a lot of people think adding a partner to a Michigan LLC is just signing a quick form and moving on, but actually, scratch that. It is a massive structural shift. It literally rewrites your company's legal and tax DNA. But hey, if you get it right, you'll prevent some major, expensive headaches down the line and unlock some incredible opportunities to scale. So, welcome to this explainer. We're going to walk through the exact step-by-step roadmap to expanding your LLC the right way.
Okay, let's dive right into this. Here's our expansion roadmap for today. We're covering the expansion decision, preparation and consensus, updating the operating agreement, filing state requirements, tax and regulatory shifts, and finally, those crucial post-addition action steps. Let's hit it.
First up, Section 1, the expansion decision. Why add a member in the first place?
So before you sign a single document, you've really got to nail down the why and the how. Maybe you need some specialized expertise, right? Or maybe you need a serious cash injection. But how you structure bringing someone on, well, it changes everything. Let's look at a classic hypothetical scenario from the IRS. Imagine a guy named Albert. He's a sole owner. If Albert simply sells a 50% interest directly to Betty, Albert's personal cash flow goes up. That money goes straight into his own pocket. But if Betty instead contributes cash directly to the LLC for her stake, that provides a direct capital infusion into the business itself. It's totally different. The structure of your deal completely dictates where that money actually lands.
Moving on to Section 2, preparation and consensus, the internal groundwork.
Now, this internal groundwork, it absolutely has to happen before the state of Michigan is ever even notified. Why? Well, if your internal operating agreement doesn't explicitly outline exactly how to add a new member, the state's default rules kick in. And let me tell you, Michigan law does not mess around here. The statute specifically says, admission requires the unanimous consent of the members entitled to vote. So, if you already have partners, you can't just casually bring in a buddy. Every single existing member has to agree, unanimously. And look, ignoring these internal rules isn't just some minor technicality. It's practically an open invitation for a lawsuit. In Michigan, if minority members feel like they're being unfairly squeezed out or ignored during a company expansion, they can actually sue you for what's called oppressive conduct. The risks here are massive. A judge could literally force you to buy them out, or, worst case scenario, order the total dissolution of your entire company. So yeah, doing this by the book, it is absolutely crucial risk management.
All right, Section 3, updating the operating agreement, the new rule book.
Okay, now we're getting to the real heavy lifting, revising your internal rule book. Because going from one single decision maker to a multi-member model means you need explicit new rules to stop future deadlocks in their tracks. You absolutely have to update your voting rights and tiebreakers. You also need to outline future capital contributions, like what happens if the business suddenly needs more cash next year? Who pays? Plus, you've got to clarify exactly how profits are distributed, establish crystal clear buyout procedures if someone eventually wants to leave, and document any management structure changes. You are effectively rewriting the operating DNA of your company here.
But quick pause for a highly actionable tip here. Do not file your operating agreement with the state of Michigan. Seriously, keep it internal. This is a highly sensitive, private governance document. It's meant strictly for your records and your partners. It does not belong on a public database where anyone can read it.
Let's move to Section 4, filing state requirements, the point of no return.
All right, so you've got your internal house in order. Now it's time to actually interact with the Michigan Department of Licensing and Regulatory Affairs, or LARA as we call it, to make this whole thing official. If bringing on this new member changes any of the core facts from your original setup, like how the LLC is managed, you have to notify the state. Luckily, it's a super simple three-step process. Step 1, complete the Certificate of Amendment, that's Form CSCL-CD 715. Step 2, simply write your LLC name and LARA ID right on your check. And Step 3, mail the whole shebang to Lansing, or just easily file it online.
And you might be wondering, what's the cost for this official state step? It is just $25. That's it. It's a surprisingly low fee, especially when you contrast that $25 with the massive, potentially business-ending costs of getting tangled in a legal dispute just because you skipped the paperwork.
Which brings us to Section 5, tax and regulatory shifts, a whole new classification.
Okay, we really need to talk about the financial reality here. Because once you add that member, the IRS suddenly views your business in a completely different light. By default, a single-member LLC is what's called a disregarded entity. That just means the business income flows straight onto your personal tax return. Easy, right? But the precise moment that second member signs on, boom, you are automatically taxed as a partnership. This is a massive shift. You now have to file a completely separate partnership tax return. You'll need to issue K-1 forms to each member, which are essentially just tax documents telling them their exact share of the profits. And on top of all that, you're likely going to need a brand new EIN from the IRS.
Now, what's really interesting about this next slide is how Michigan actually handles these federal classifications. Let's break it down. If you remain a disregarded entity or shift to a partnership, the individual owners are the ones who pay the Michigan income tax on their personal returns, and that's at a rate of 4.25%. But if you actively elect to be taxed as a C corporation, maybe you're doing that to raise some serious capital, then the LLC entity itself pays a 6% corporate income tax. So the classification you end up choosing dramatically shifts who actually ends up holding the bag for that tax burden.
And for those of you looking to really optimize things, here is a pretty advanced, real game changer of a strategy from our sources. Michigan actually offers an optional flow-through entity tax election. Basically, this allows your newly expanded LLC to pay that 4.25% tax at the business level rather than at your personal level. Now, why does that even matter? Because when the business pays it, it becomes deductible on your federal return. This effectively lets you bypass certain federal limits on state and local tax deductions. It is a wildly powerful tool to save your business some real, tangible money.
And finally, Section 6, Post-Addition Action Steps Housekeeping. Okay, you're in the home stretch, but the process actually isn't quite over just because the operating agreement is signed and Laura has been paid. You still need to run through this final housekeeping checklist. First, formally record the new member's exact unit count in your internal equity ledger. Second, you are almost certainly obligated to notify your banks and your lenders about the ownership change. Don't skip that. Third, immediately modify your insurance policies and any local professional licenses. And finally, you've got to close out your accounting books to prepare for a short-year tax return. Remember, the expansion is only really complete when the rest of the world actually knows about it. As we wrap things up today, I do need to quickly note that this explainer is designed to act as an educational roadmap. Every single business is entirely unique, so what we've covered today provides general information only. Please be sure to consult with a qualified attorney or a dedicated tax professional to get personalized advice tailored exactly to your specific legal and financial situation. So, look at how far you've come. You started this whole process with a single vision, and now? Your LLC's governance has completely evolved to accommodate new voices, new capital, and fresh expertise. The bureaucratic hurdles are officially behind you, and your legal foundation is rock solid. So, the only question left for you is, with this powerful new structure firmly in place, how big are you ready to scale your business?